At one point, the market fell as if down a well.
Let's talk about the speed with which we are watching this market deteriorate.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
The recession of 2008 was the first economic decline I was old enough to experience and understand. I was given the impression it was a financial disaster on a scale never seen before. But what if it wasn't? So Jim, as someone who's been investing for 40 plus years, what can you tell us about the 2008 recession?
Well, it was certainly a big one, and second only the Great Depression. But these things are to be expected. It is part of the process, and 2008 is certainly not the only time the stock market has plunged in my 40 years. The Great Recession of 1974-1975, the now infamous Business Week cover, The Death of Equities, which, as it turned out, marked the beginning of the greatest bull market of all time. The massive inflation of the late 1970s and early 1980s. The crash of 1987, where we had the biggest one-day drop in history. The recession of the early 1990s. The tech crash of the late 1990s. And that little dust-up that we had in 2008.
Wow, so it seems like there's a cycle of boom and bust that happens every 5 or 10 years or so.
I tell my 20-year-old daughter, who hopefully is going to have a long lifetime, maybe live to 100 years, that's another 80 years of investing, that things like this little dust-up we had in 2008, she can expect to see 2, 3, 4 times in her lifetime. And she'll see smaller crashes and bear markets on a much more frequent schedule. These are a natural part of the process. They are to be expected. Now, you can't predict when they're going to happen, so the best thing to do when they come is just ride out the storm and ignore them. If you have the resources, it's also a wonderful opportunity to add money to your investments because essentially you're buying stocks on sale.
The reason why people lose money in the stock market is they panic and sell with each inevitable crash, then wait for the recovery to jump back in. The goal of this series of videos is to help you recognize the counterproductive psychology that causes bad investment decisions and help you correct them. Tune in next week to find out why not only will the market always recover, but it will always go up.
I bet no one has told you that before. Like this video series, it's based on excerpts from the book The Simple Path to Wealth by Jim Collins. And we just scratched the surface. Click here to learn more about it. Thanks for watching.